All right, here we go back again. It is Saturday, September 24th. Going over some stock indices. We did Dow, NASDAQ, Bitcoin, S&P 500. Let's check on some ETF SOXL semiconductors, 3 times levered. Yeah, this follows a semiconductor index pretty much. Yeah, this makes huge moves too. When you have 3 times levered, 3 times the gains, 3 times the losses, you can see on that COVID move, and it got to, actually is before COVID, about 22.28, 22.20 we'll call it. This thing dropped. The low in this was, where's the low here? Can I get these little candles? Looks like 357. Can you imagine buying a 357? This thing went on the 70. You're pretty much, if you put in a little bit of money, you have 100,000 easy. That was probably with very little money. And then this thing took off, did a reverse split back here in 2021 March. Nice little pullback, bounce, pullback again right to pretty much 27.50. It grinded its way up with some pullbacks. And then the last big move was that October, November, December. A lot of stocks. Everything was flying back then. Penny stocks, everything was just going crazy. And then the high on this, 74.07, 74.21 looks like the all-time high. And then here we go, big drop. A little bit of a bounce here, got past 50, then came down again, big candle, went all the way back up, but couldn't break this trend line down here. 20 EMA, came back below 30, we bounced near 45, and then it went down again. Yeah, this was bearish ever since January. The crossover looks like in the daily chart was about January 10th. We had the 20 EMA over 13 EMA, then we came down. Nice little bounce here again. Waterfall drop in June. Then July was a really nice move. You had a low of 10.53. We got the 22 plus. It's a $10 gain. $10 plus. And then here we are now. Big drop. He had a small little bounce here in September, and we're dropping towards the end of the month. And we passed that low of 10.53, low 9.45. It closed at 10.01 after hours. So this trend line was a wedge, and it came out big time right here. That was the move you're looking for if you're going to play this wedge. This is a daily chart wedge. Eventually, it had to break out, and it did. Semis were crushed. But now we have another trend line. So you have right here 30 and 26, 22, 20, and then back we go. So this is a new trend line. Forget this now. We have this line every time we're going lower. The highs are going lower. The lows are going lower. But you can make money here. What I'm looking for here, this can get up, could get a small rally here to 12.14. Yeah, the ultimate goal here is going to be about 18, maybe 20-ish. And the thing is, though, like the market really ended really bad last week. So are we going below these levels? I already did, but we're going to continue this, sell lower until we find sort of that point where we're extremely oversold and we get a bounce eventually. That's what we're looking for here. So if you go in here, you could be early. This could go to 8, 7, 6 before we get a bounce. And each bounce has been lower. So if you're looking for your trend line or any kind of line to confirm a bounce up, that's where you would sell. Weekly chart, you can see here crossover on the weekly was about February, into February. See that the 20 EMA over the 30 EMA, that's completely bearish when you're going down. On the way up, it's a reverse. Pink lines over the white. On this, white lines above the pink, bearish. Now we're getting extremely oversold in the weekly, 14.95 stochastics. But doesn't mean it's just going to bounce here. It could go even lower before you get a bounce. And look at all these bounces. That's why you look at your larger time frames. Look at the weekly touch EMAs, touch 20 EMA. This one didn't even get close. Touched right here. Look at that rate on it again almost. That's one looking for a bounce would be like 15, 16 up here, 18 maybe overshoot to 20. Monthly chart. you can see here, this is the lowest it's ever been as far as I can see. Way back in 2012, it was 13. You have 15 back here in 2019 on stochastics. We're at 7. Yeah, this is absolutely straight down. Look at the way up. It was completely bullish. Your pink line over white. Now look at this. Now you're crossing over. And the thing is, this is extremely oversold. It's probably more overdone, just like to the top side. See this? Look at the space here. Your 13 EMA is at 27. This is at 10. It's really far below, which is a good sign if you're long, because eventually you're going to get a move up here. I don't know when. It could be November, December rally, Christmas rally, end of the year rally. So that's one positive. Quarterly, this is really bad. Look at this. Red over white. This is so far away. It's diving deep. It's like when you see construction and they're digging, they put that big plow and they dig deep under the ground. Like this is digging deep. It's not even close to crossing over. This could dive under 20 on stochastics. It's the lowest it's ever been as far as this chart's been around since 2010. And then you're going to have really oversold. That's why I think this could even go to the COVID low at this point. It could go back to 3. And then, yeah, that would be absolutely crazy if it does. That would be load up time. And you just sit there half a year. Eventually it'll bounce. I'm not saying it'll go to 70 by next year, but it can come back up slowly, 20. Who knows, maybe get to 30, unless things are just so bad in the market. And next year's everything falls apart, like housing, jobs, then this could take even longer. Yearly, look at this yearly. This candle engulfed like all these candles from 2020, 2019. And it's going straight back down. That is unbelievable. All right, so this is what it looks like in semis. A lot of problems with getting parts from overseas. Semiconductors and cars, computer chips, anything has to do with semiconductors. Supply chain is a huge problem. And it's just right now, this is being taken apart in the market. Some are worse than other parts of the market. They're all pretty bad, but this is really bad. But looking at here, this pyramid right up here, back down, didn't hold. This wedge here from these lines coming down. And you have this from that August wick. And you have a hammer wick here, so it's converging here. And then you have another line straight down here. It's more of an open space, but I try to converge it right here, which could get a little breakup. So if the market rally, semiconductors rally, I would look for 16 to 18, my target zone. And then maybe 20 if we really get a strong rally like July. And we'll see coming into end of September now. October is like the worst months of the year before we make it a rally in November, December. Because October, we have crashes. October is not really a great month. So this is how it stands right here. You can see this, the wedge. This was a rising wedge. We had a small move. Eventually this was down here, but then we broke up. Draw your lines, they all connect. Here's your low lines, and eventually I knew this is like, how long is this going to go for, this rising wedge in the market? I couldn't figure out what was going to break the market. I think I did a SPY video last year. I'm like, something's going to break this market. And I didn't think a war, like in this day and age, we'd have a major war like that affecting all kinds of agriculture and supply chain. So, and just the exact opposite, going up, and look at this, going down. Then we had a break and even down further. Yeah, that COVID low at 3. If this would drop to 3, that would be like an all-time buy. You're getting a chance again in 2020. That's why a lot of this, the market, you don't get drops like this. You had 1987 crash. You had 2000.com, which lasted, about 3 years. You had financial crash, was almost like a year and a half plus. You're getting it right back again from 2020. And you're getting a chance again. It's coming right back down to that point. It's only been 2 years. Now the problem is we have, the conditions have changed. Of course, 0% interest rates was all this. That's going back to 2008. So it's 14 years. And it was easy money. Now interest rates are rising. You have 6%, maybe 7%. That's not good. So that's really bad for everyone. but it's still eventually this will clear its way out like the market always does. Nothing's going to go down forever, just like nothing goes up forever. It's just a matter of where is this low going to eventually end. If we retrace all the way back, that's 100% retracement to 3. Sometimes it comes close. It could come to 5. And we'll see what happens here. These semiconductors have been on a run for probably the longest of time. These zero interest rates. They were the hot pick. ETFs, like NVIDIA, all them, AMD, they're part of semiconductors. And so this has been on a tear for quite a while. We'll see what happens here. But I think this could be one of the all-time buys. Longer term, you're talking 3 to 5 years. 3 to 5 years, that little sweet zone. And you're probably, this will be back unless the market just absolutely turns into a disaster. 30, 35, maybe 40 might come all the way back in 3 to 5 years. That's a long time, 5 years from now, even 3 years. We'll see. This could eventually come down like this. 2023 sideways. We come up slowly but surely. We work our way back up. So we'll see. But there is good swing trading opportunities like this. This is going to be a next one. This will hit this trend line again. Could it be October, November, December? Probably within the end of this year, you're going to get another bounce. All right, so that's it. SOXL, Direction Daily, Semiconductors, bullish 3 times levered. 3 times levered means 3 times the gains, 3 times the losses. So I think in SOXL there's actually SOXS, SOX. Just like in QQQ, there's TQQQ. So it just means more of a gain, more of a loss, as you can see right here. All right, that's it. Please subscribe to Mike Cayman Trade Alerts on YouTube. Smash the like button. Check out any links I have below. Peace.